All right, to begin, of course, whenever I do any technical analysis, the very first thing I do is I don't care what chart it is. The first thing I'm gonna do is I'm gonna come out here and zoom out on the monthly time frame, of course, as you've seen me do time and time again. The first thing I want to do is see the big picture. I want to see all the data known to man for this currency or whatever chart that I'm looking at. So as you see here, we see the high, the monthly high or the all-time high rather of pound USD, way up there at 2.1. Then we see the low. It was actually real recent. Back 5 years ago, we had the all-time low here at 1.12. All right. Now, if you know what's going on right now, you know we're in some troubling times in the world economy. So, with that being said, you can see how we're clearly approaching the all-time lows again. And in my opinion, that's where we're headed with no breaks. So, by that I mean we'll be headed back towards this low. Whenever you have a swing high or swing low in general, you want to also, I haven't said this a lot lately, but you want to mark that as a zone. I'd use the wick to the body when I'm using that zone. And what I mean wick to body, mean the top of that wick here at the tip of that candle to the body of where that wick begins. All right. Same thing for instance, although this is an all-time high and this is an all-time low, in the middle, in between there, we do have a swing which falls here. All right, and for that swing, wick, the beginning of the wick, the beginning of the wick to the body of the candle that makes that wick. And you'll see that's the zone that we would put there. All right. That's just simply labeling off the swings. I can go back and do that here too, because we do have a swing. I can do that here. All right. And what I do is those are now zones. Now, of course, you want to use the most recent zones are the most relevant. The most recent zone is all-time low to the candle, wick the body. Now look at that zone we have there. We're entering that zone with great velocity. Following me so far? All right, good deal. So if you see here on the monthly, from a looking from a monthly perspective, which is of course a longer term perspective, you can see how price is itching to get back down there and terrorize these lows. Now, this is technically what would be considered uncharted territory that we're entering because there's not a lot of data down there. It's really never been charted. That area down there that we're entering is our record breaking levels. And by that means all time lows. Now, of course, if that low's taken out, then we will have a new all time low created here in 2020. Now, of course, with the situations we have going on globally, That is definitely a realistic scenario. And in my opinion, that's exactly what I see happening. The worst of the economic despair is yet to come. So once you're able to identify your swings and you mark off your zones, no matter what time frame you're on, again, I start on the monthly, but again, you want to do this to every time frame as you work your way all the way down to the minute. So I'm gonna remove this zone. Well, I'm not gonna remove it. I'm actually just gonna change the color to make it a little lighter so we can actually see through it. All right. All right. So now, basically, I want to key in on this area here because although I have marked up all the data and I can see most of the data points on the monthly time frame, I want to start zooming in to see what's really going on inside of this month. So I'll bump down to the weekly. Now, of course, the weekly is gonna still be aligned with the markups that I've done. Yeah, all the way down past the 4 hour. I do that because once you get down past the 4 hour, you're really just looking for your in trying to time your entry out. So you're really waiting for the proper price action as well as the session. Now, when I get down here into let me see here. It's gonna be on this one. I'll send you these boxes. Once you get down into the 1 hour, 30 minutes, and 15-minute time frames, they start to indicate the sessions. So you can time that out a little, really, really accurately. Let me show you what it looks like here. This is a naked chart, but I'm going to add those boxes that we just saw. And change the color so we can see that. See this, still see the markups a little better. All right, what we have here are session boxes. So once we get down into the 1 hour, 30 minute, and 15-minute charts, those will start to appear. I don't like to see them on anything above the 1 hour because I'm only looking for my entries down below the 1 hour chart. I'll email it. I'll email you that file once the session's over. And do you know how to install indicators to your MetaTrader 4? I'm gonna add them on here too. That way, when we get down there, you'll see how I use those to my advantage. All right, so going back to the weekly here on the pound USD. Now, with price action, I've reviewed price action at the close of every candle based on its time frame. So again, let's go back and look at that price action on the monthly. Here on the monthly, Of course, based on price action, we can see that the bears push price all the way down here. Before the end of that trading period, price was able to the bulls were able to step back in and come back up at this level. Now, with this long wick pointed here to the downside, it's imminent for the market to come back down there and retest that area. So, with that being said, we know that we this area here is definitely prime time territory or a prime target at this moment before moving back up into this area to the upside. We know the bears are going to retest this. So that so knowing that on the monthly basis knows that for this month long term we need to be looking for a short position. Okay. Now I do that starting from the month, so I know overall for the entire month of April, I need to be looking for short positions on the pound. So again, once you've done that and you come into the weekly, you now know, of course, there's 4 weeks in the month of April. What we're looking at here, we're in the third week. We're looking at 3 weeks. We got 1, 2, 3, based on this candle formation here. This would be the first week of April. This would be the second week of April, third week of April. I know that just simply because we're on week 3 of April, so it's easy just to do that right off the top of your head. We know count 3 weeks back, and we're in this current one. So if I'm looking for sales in for the month long term, that would mean that somewhere one of these 4 weeks are going to be extremely bearish due to the fact that the month will be closing bearish or at least retesting this area here. We haven't retested this area yet. So I'm expecting to see that this week or next week. An extreme bullish bullish move to the downside. Now, now that we've identified that and we see that this week has actually began to turn us into the bullish month that we were have been expecting by looking at the monthly, we now can begin to even look at more sell possession and setups and opportunities on the 4 hour. I'm sorry, I skipped the daily. Let's go back to the daily. All right. Now, same thing with the daily. Now, when it comes to price action, each candle typically retests the high, the low, or the midpoint of the previous candle. The midpoints of the previous candle can be seen with the Fibonacci coming to the 50 or the 61.8. A lot of times you'll see the 50 or the 61 being hit on a retrace. Those are the prime retrace areas, 50.0 and the 61.8. A lot of times on my Fibonacci, on my custom Fibonacci, you'll see that that is actually the retrace or the conservative entry or TP1, depending on how you set it up. There's a couple different ways to set up that Fibonacci that I've created or that's floating around. The best way to set up the fibs for a beginner, I'll go ahead and set that. We'll go ahead and set that up. What you'll do is simply just put it on your chart, and for this, I'm gonna put it on this swing low here. and this high here. All right, and we'll go into the Fibonacci properties. You can just right click on that and come into the Fibonacci properties. And I'll go ahead and we'll edit this together. Down at the zero swing level on the Fibonacci, I have the new swing point, 0.236. The description is move stop to entry. 0.382 TP1. 0.5 TP2. 0.618 TP3. 1.0 even, which is pretty much 100% TP4. 1.618 TP5, 2.618 TP6, 4.236 is actually TP7. And 0.15 is your entry. Now, when it comes to setting up the fibs, or applying the fibs rather, when you apply the fibs, you want to make sure that you have a confirmed reversal or a complete swing. And by that I mean once the peak is formed, 2 to 3 candles must push off of it. So here we have a peak and we have several candles. We could have used the Fibonacci there. Let me show you how that would have looked. Based on my Fibonacci, this is how you would have been able to read this. You would have known that was a swing, that was a swing. You would have also known this was a swing. So you could have started right here. There you go there. Then you would have seen that price did not quite make it to TP7, but you'll see that price did achieve TP6. So you actually, this would have been a safe 60 pip trade. Or actually, it would have been a little more than 60 pip, almost about 600 or so. There. And that's just to the TP6. In and out bagged. Now here, we can continue to leave this fib. We don't even have to move this fibs technically for this situation. Because as you see, price retested back up under the TP5. So it technically would be this. Now I'm going to show you a harmonic that's actually beginning to form in here as well. All right, that's the beginning leg of a harmonic pattern, which means the bulls will come back into play because this is a bullish harmonic pattern that's actually setting up, but they're just not here yet. Now, from here, I'm actually going to go ahead and map the whole thing out. So, now that we have this swing completed, Fibonacci, here to here. Now, notice how the bulls were satisfied with TP3. Okay, so the bears took the trend from entry to TP6. Bears came back in when the bulls arrived at their TP3. Here. I am recording this so you can review this as many times as you need to, because there's not anybody out there that's gonna break it down the way I do. It's kind of unique. It's kind of unique technical analysis the way I break the charts down. It's very unique. So now that the bull, I simply trade with the bulls and the bears. So as the bulls achieved their TP3, the bears came back into the market. So now we can remove that Fibonacci. We do have a confirmed reversal because we have 2 to 3 candles there pushing off that peak. So now, and we know the bulls achieved their TP. So now we go from new swing low to swing high. And now our Fibonacci is here again. Now notice how our entry falls away up there. And now this is the daily, so I'm looking at the daily trend. This has also helped me analyze the fact that the monthly should be bearish by analyzing the daily. So now the dailies are pushing bearish. So the next week or so is going to be straight bears for the bears in the pound market. Okay. All right. So next we can. This is the daily again now. Okay. Just a reminder. This is still the daily chart. So now let's go into the 4 hour. Now here on the 4 hour, based on what we looked at on the daily, the weekly, and the monthly, we've broken down the technical analysis, and it's brought us here to this point, which is most current and most relevant to price action that we're going to be seeing today. Now, as you see from the Fibonacci standpoint, once price begins to shift a little more, which is going to likely happen in this next hour, we can move our stops to our entry. I've actually been scalping this all the way down. That's why my entry is actually coming right in here again at the move stop to entry. But once this 4 hour candle begins to break down, I'll move my stops to entry. But I'm actually going to take these all the way down in here to TP4. And now TP4 is the all-time low in the history of the world. So if we break that level, we could see a free fall. Okay, I've actually personally been trading this pound down since right here at 1.44 back in 2017. I've been selling, well, yeah, I've been selling the pound since 2017. I remember having a live session with a student that's still active today when I told him we could sell this for the next 5 years, and so far we're dead on the money. We actually started selling it right here, and if we actually could have held this position, we could have held this position from day to day. But we got in about right here on the top of this monthly candle. I remember it like the back of my hand. But of course, that was 3 years ago, so that trade has been closed. Unfortunately, I wish I would have held it and had $1 up there. That would have been about 60,000, 70,000 just that trade alone. Although I would have, of course, had to wait till today for it to cash out. I saw your message about oil too. I'll go over oil in a minute too. Right now, there's actually currently about a dozen or more oil tankers on the coast of California that have nowhere to unload their oil. The ports are closed. Of course, that's due to the corona madness, but they're sitting there on the edge of the ocean with nowhere to unload the oil. Oh yeah, good deal, good deal. So you caught U.S. oil down there low. Yeah, I knew it was a damn fluke for oil. The oil fell to 50 cents a gallon, and 2 months ago it was $70. So just imagine, like, billions have been lost in the oil industry, and that's the past couple of weeks with well, of course, I mean, gas was a steal at the gas station. Damn near a highway robbery at the gas station. All right, let's go back in here to the 4 hour. Here we're on the 4 hour. Now let's go into the 1 hour here too. Now, here on the 1 hour, of course, we have a little more swings than what we can see on the monthly, weekly, and daily and things like that. Because of course, as I said, once you get down here into the weekly, you're looking for your entry. I mean, once you get down here to the hour, you're really looking for your entry at that point. So then that's where I utilize the sessions and they come into play. For example, each high and low of each box, is a high and low of a session. For example, this blue box, high of London session yesterday, low of London session yesterday. This green box, high of New York session yesterday, low of New York session yesterday. Okay, now the London session is still open until noon Eastern. So when it comes to the green box, the London session is still in play up until about right there, that last 1 hour candle of the green box. So they're overlapping. So with knowing that data, what that's telling me is this area here was the highest point in which the market allowed, or the London market, overall market for the day, allowed price to come yesterday. That's what the high of that box indicates. The low of this box indicates the fact that this was the lowest point the London market allowed price to go before the New York session opened. So the London market allowed it to go here. New York session came in and pushed it down here. But we'll get to that later. So right here is the lowest point the London market allowed the market to go yesterday. And when the US market opened and came in, it pushed the market down here. All right. So that's three levels. Okay. The New York market is just now entering today. So they will be the ones to test their lowest point that they made yesterday here at 1.224. That makes sense? This is the lowest point the New York market pushed the market yesterday. This is the New York market today. So as you see, they're already at the highest point that was accepted yesterday for both London and New York. London today, Asian today. So the only place that is unmarked, untouched, is their lowest yesterday. So they'll retest the low of yesterday session to see if it's truly accepted. And if it's accepted, they'll proceed further. That makes sense? All right, good deal. So now you see how once you've done the technical analysis on your daily, weekly, and your monthly, daily, and weekly, and your 4 hour slightly, once you get to the hour, 30 minutes, and 15, you're simply looking for your entries off of your higher time frame analysis. And oil and UCAD work inverse. Did you catch my video that I put out on UCAD last night, yesterday afternoon? Yeah, I'll post it for you once. I'll post it for you whenever I send you the link to this stream as well. All right. Same thing with EU. So to close out on the pound, I see the pound completing. Oops, they made me drop that there. All right. If you look, we got first wave, retrace, and this second wave. Okay, put it like this. Whenever you see a pattern forming out like this second wave down is typically going to be identical to the first. You see that? See how I just simply did that for charting purposes? I kind of see the distance based on the first rally push. And then from here we'll see a move slightly like this. This will be the W. So based on what my technical analysis that I've done here, I see the market playing out in this fashion. Now, as far as harmonics, I know you've heard a lot of people talk about harmonics. You know, IML, that's their sales pitch. We got a harmonic scanner, paint your harmonics. But if you know what you're doing, you can draw the harmonics yourself. And there's your harmonic pattern there. Right, right, right. And see, a lot of time now it just really comes down to knowing your measurements. Now, notice how both of these are the same, but these left swings are different. And what I mean by the left swings is this swing here. I mean the right hand swings, right legs of the W rather. This one and this one. They're different because these are going to be the impulse legs. These are the trend. Boom. The red is the trend. Boom. The green are the retrace or the snapbacks. So this is like a move, fall back, move, then take it all back. It's like a bait and switch almost. Like they feed them, take a little back, feed them some more, and fade them off, take it all back. And then of course, this is what's considered D point. So we have A, we got an A point. Oh shit. A point, B, B to C. No, I'm sorry. X to A to B, B to C, C to D. I'll actually pull up a harmonic diagram for you really quick. These are harmonic patterns here. Where is it at? There we go. So you see we have X to A to B, B to C, C to D. This image here on the left, this bearish butterfly, is the pattern that we just drew on the chart. Can you see that little pattern right there on the top right? This one right here is the one we just drew. We just drew a bearish butterfly. D point is a sell, a prime sell area. So by what I mean by that is, of course, we'll come down here to C point down here, but we'll also come back to D, which is up here, and D is where we'll continue to sell. And once we sell at D, we'll likely come back to 50%, which is the baseline, which will actually end up being this support area here, here. So to be honest, right now, based on what we just looked at, that's the next 6 months of the pound USD, top bottom up, top bottom down. So that would, in my opinion, take pound from here to here, back up here, back down here, and then back. Oh, back up here again. Can you see that? Okay, you said the screen didn't switch. Okay, my bad. Let's see where we're at. All right, so what can you see now? Sorry, I lost. I don't know where the screen's at either. Okay, web page. So can you see that you can see that pattern now? That pattern up in the top right? Okay, yeah, that's the one we just drew. We just drew the bearish butterfly. The bullish butterfly would be a buy area at D level. The bearish butterfly is a sell level, a sell at D. But if you're able to trace and draw out the harmonic in advance, you can actually trade each leg, and that's what we're doing. All right, now let me go back to the MT4. All right, my chart's back up for you. All right, so there's the harmonic pattern. Right now, we are in the B to C. We are in the B to C area of the, and I'll actually send you this image now, so you can see what I'm talking about. I'll send you this image in Telegram. I'm gonna send it to you right now. Let me know when you got that. So right now we are in the BC completion. We're completing the BC leg for this harmonic pattern. And then if you follow the green lines that I've drawn here, that will ultimately be the path for the next six to let's see, we can actually see exactly how long that is. 7/23. So what's the seventh month? That's July. That's my anniversary. So this is the next 90 days on the pound USD. Now the Euro USD is typically gonna go the same route due to the fact that it's against the dollar. Due to yeah. All right. Now the same thing basically here for Euro USD. Let's start on the monthly. You're on the monthly. This is all the data as always. Then we'll all time low, all time high. We'll see these independent swings or these intra swings. Because although there are different candles and many candles, you have to realize that the currency is still one currency. So whether price was down here or down here, it's the same currency. By that, I'm saying if every candle put together makes up a bigger candle, then every single candle we're looking at on the monthly also makes up the lifetime of that currency, which is still just one candle. That makes sense? And that's what I try to get people to realize. If every 1 minute candle makes up every if 1 minute candles make up a 5 minute candle, three 5 minute candles make up a 15 minute candle, four 15s make up a 1 hour, four 1 hours make up a 4 hour, so forth and so forth. 12 months would equal a year candle. If they had a decade candle, it would be 10 year candles. If they had a century candle, it would be 110 year candles, or 10 decade candles, or 101 year candles. But at the end of the day, it's all one candle that never stops being created. So it's all in flow. It's all in flow. Got a peek there. Now I'm gonna zoom in a little bit just to make sure I got these a little accurate. All right, now that I've marked those off again, I'm gonna go ahead and hit my zones, wick the body, Now, once you've done this on your pairs, you don't have to do this again and again. I simply do it because a lot of times I clear off my charts, and it's good for practice just to do it every time you open your charts. It's good for practice because at this point now I can really fly through this, fly through the technical analysis part and get straight to identifying an entry or opportunity. Once you train your eyes to see it, you're gonna see it immediately, and it's not gonna be hard to see. So here, what we're looking at, we can see that we've definitely been pushing down levels. We can see a trend forming here. We can connect that by drawing the trend line. So we can clearly see that price is definitely trending down. We can see that with the levels, the baseline levels, as well as the lower highs, series of lower highs that are forming here. Now at this zone here that we're at here at 1.082, that level there, of course, we see we're breaking down that zone as we speak. Again, if we look at the current price action on the monthly candle, we can definitely see that price should be coming down here to retest or possibly breach this area here. So let's go down to the weekly. Here in the weekly, we can see a W or an M, a fake out W in my opinion. See that there? W, not much. It is a W, but it's a fake out. Because notice how this comes right back. That terminates the W. Ooh, I don't know what that was. I just placed in there. Okay, that was just a stop loss. All right. So you see that W, not so much. M's and W's are double bottoms or triple bottoms. So here we have a double bottom, but it's a failed W. Double bottom here, and then so basically we have the double bottom here. That would be your W here. But as you see, we're coming back for it again, which would tear that W out the park. And then you have a W that now is an M. W, failed W, new M. See that? So instead of a double bottom forming a W, it's a double top forming an M. You see that? And also M's and W's also form the zigzags. So when we're looking for M's and W's, we're identifying double tops and double bottoms. go do now. Uh, basically, so let's go to the. I'm gonna do USD JPY too, because that's a good one that's paying out really well today. So now, based on that failed W turned M, this is what we now see approaching on our board. Here's the 4 hour on our boards. Now, here in the 1 hour on our boards. Remember, same thing about the sessions. The sessions are going to identify the same thing. Notice how if you look at the highs of these days and the highs of these sessions, they're all in the same area. Okay, so that would signify our range here. And you can see how we zigzagged in through that, painting several false M's and several false W's just by the up and down movement. Eventually, the last one is going to form a true M or a true W. But you see how the zigzag and the range in there is pointing or painting false M's and W's through the whole range. With this last one being an M as well. You follow me on that? So this position that we're in now is forming a breakout to the range that it's been in for the past 1, 2, 3, 4 for the past 4 days. Been in the range for the past 4 days. This formation that we're getting now is actually breaking out that range here. Now we can also use our Fibonacci here too. I'm gonna go ahead and clear this just so we can see this naked 1 hour chart. So here, what we can do, since we have a completed swing and everything, we can verify by going back 2 to 3 swings. So 1 swing, 2 swing, 3 swing, 4 swing. Let's just start here to here. That matches up because what we can use here is a double top. We can use this double top here. So as you see, entry, fibs, and everything, don't ask me how I eyeballed that, but it's perfect. If you look at the chart, entry to TP, target, stop loss, everything's perfect. And we did it with our eyeballs. You follow me? You're in this trade here, right? Or the pound? All blue. Yes, sir. Yes, sir. So now, based on the fibs and everything that we've put on our charts, we can see where our TP areas and our targets should be. And again, if you got to set up your fibs, you in this video, when I went through it, whenever you run it back, you'll be able to go back to that moment and pause it and do all your editing and all that good stuff. If you didn't do it already. And so far, basically, after all that review, do you have any questions for me so far? Let me know if I need to go back over anything in particular or anything like that. All right. Now, as far as identifying price action, it's as simple as whatever time frame you're on. Know that peaks in the swing peaks, take 2 to 3 candles to form. Okay. So by that I mean this peak here was confirmed only after the third candle. Okay, and what I mean by the third candle is the candles on the cinder candle, the cinder candle high or low must be higher than both candles on the left and right, or lower than both candles on the left and right. That's how you identify a swing high or a swing low with price action. Notice how this peak is higher than both this one on the left and the one on the right. This peak is higher or is lower than both the candle on the left and the candle on the right. Here, what we're doing forming now, this likely won't be a peak because look at the low peak on the left, the low peak on the left, and the low peak on the right is still forming. The low peak on the right will likely exceed the one on the center one, which will make this no longer a swing low. Now, as far as price action in the process of forming the candles, you want to pay attention that the fact that each new candle will retest the high and low of the previous candle. Okay. Now, as far as momentum within the next or preceding candle, that's all based on how the current candle closes. So, with identifying these two candles here, this candle forming now will likely be a very aggressive to the downside and likely be the one that extends this low for the simple fact that this is a doji candle, which means no change. Okay? That means no change in the market. The candle before no change was extremely bearish. The candle before that was extremely bearish. The candle before that was bearish and it was engulfing. The candle before that formed a peak. So that's like saying, okay, we mashed it, we pressed the gas, we pressed it harder, we pressed it harder, we put cruise control on, so we know we're gonna keep floating in that same direction until we press the brakes. The brakes will be a pin or a doji, a hammer. I'll send you a price action pattern recognition sheet whenever we're done with the video as well. But basically, with price action, just know that every candle, no matter what time frame you're on, each new candle is going to react based on the last candle on that particular time frame. So here, the doji on the hour signifies that we're still going to be in bullish momentum. Here on the 4 hour, this pretty much identified the reversal, the breaks. So this the last 4 hour candle with that pin to the high was the breaks for the bulls. And as you see, as soon as the brakes were pressed for the bulls, the gas was pressed for the bears. And that's really all the market is it's a transition from bulls to bears, bulls to bears, bulls to bears, bulls to bears. You just all we have to do is identify the key signs that signify which one is actually entering and taking over the market. Trading plan. Okay, yes, I have several trading plans. So as far as the trading plan, just let me know what size balance you want to start with, how long you want the trading plan to last, and I'll set you up with a daily goal and a plan to get straight to it. So all I need is the your what you want to start the balance with, your end goal, and how long you want it to take. Yeah, you can do 200. You can do as little as 50. I can create a plan with $50. So any amount you want to get started with, I can create a plan with that. And once I create the plan for you, every time you complete it, all you have to do is adjust the beginning numbers and repeat. Okay, good deal. I have a plan for you by the end of the day today. So I have that plan for you by the end of the day today. This video will be posted and viewable for playback within the next 20 minutes. And if you have any questions, shoot me a message and we'll get on and I'll go ahead and answer those. I want you to review the video if any new questions arise after you replay it because I know everything might not jump out at you right this moment. So as you sit back and review it, if you jot down any questions over anything I mentioned, then we'll get back on and touch bases on those as well. And you're welcome, man. No doubt, man. Once the app is fully running, we're gonna do a lot more of these live sessions. I'm gonna be more consistent with them for the group in general. I'm gonna have more time available, so we're definitely headed in the right direction. All right, man. Have a blessed day, and as soon as I have that link, I'll send it over to you.